Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour. I'm Ekta Batra and with me is Prashant Nair, and it's turning out to be a good steady start for our markets, at least for today. So the Nifty is holding comfortably above 10,600, and what we are seeing is on a week-to-date basis as well. It's been good gains for the market. So week-to-date, the Nifty and the Sensex are up over around 1% We have the mid-cap index, which has gained around 1.5%, and the Bank Nifty, which is up around 0.5%. So steady gains coming in. Let's see whether this sustains into the second half of the trading session. A lot of stocks in focus. So TCS, on account of a reaction to its numbers. We have Infosys, which is just about flattened out ahead of its numbers this evening, and we have stocks such as Dish TV, which is down and out on evaluation of its merger with Videocon. Capital First, which is our news break from last evening that there is a potential deal round the corner. So all of these stocks in focus, which we will be discussing over the course of this show. Hi, Prashant.
Ekta, hi, good morning. So 23 points, as you said. The point, though, I just want to make is that the moves are really very small. I mean, you look at sectoral indices, nothing really going on there. Very few sectors moving 1% either ways. And you look at stocks, again, the moves seem to be pretty small, except a few names. I mean, there will always be a few 10%, 15% kind of movers, and they're there. But generally speaking, in the well-traded, top-traded part of the market, the price changes are small. I mean, the futures, for that matter, are at a 2-odd point premium. So it's been a quiet session so far. This week, actually, not all of this week, but a few days have been pretty good for a bunch of these Tata Group stocks, Tata Metallics, Tata LXI, even something like a Tata Investment, and the IT stocks, TCS, etc., had done well before the numbers. So I think one of them is at the bottom of the screen. I think it is Tata Metallics, which is up quite a bit. We'll pay attention to some of the others as well as we go along. But let's just very quickly take stock of the mid-cap part of the market as well, very briefly. So take a look at a few stocks. I want to just put out top-traded stocks, both up and down. So let's start with KEI Industries, which is up a full 10%. It's been that way since the market started. You look at Patel Engineering, again, a full 10% gain there. Snowman Logistics is up 7%. There's Tin Plate, again a Tata Group company. So actually, yes, I mean, there's Tin Plate, Tata Sponge, I saw Tata Metallics, all up 5-odd% a piece. So this is the top traded, and along with it, I mean, a bunch of stocks which are moving higher. Just one other name is Syntex Plastics. SPTL is the code. That is down 6%. I mean, that got to under 80, started to move going into results. Results, I think, came in yesterday. The numbers have been poor and has taken a bit of a knock once again. Right on top of the show, we have a special guest joining us. The CFA Society India is hosting its 8th India Investment Conference in Mumbai. And from the sidelines of it, we have Rupal Bhansali, Chief Investment Officer and International and Global Equities Portfolio Manager at Ariel Investments. Rupal, thanks very much. Good morning. Good to have you here. Could you tell us a little bit about, your firm, the kind of investing that it does to begin with?
Well, Ariel Investments, our logo is the turtle, so we very much believe in slow and steady wins the race. Patience is the cornerstone of our investment philosophy, but also known consensus investing. And as you may have heard me speak this morning at the CFA Society event, I spoke a lot about the power and payoff of known consensus investing. That's kind of what we are known for.
Okay. Rupal, hi. Thanks very much for joining in. So what's your view in terms of what could happen with the global markets as well as India in 2018? We've seen fresh record highs for most markets, good surge for India as well in 2017. Do you think that optimism is probably going to get only better as we go into the year, or maybe there's some amount of caution?
Well, I think trying to predict what happens in a 12-month window is kind of a very difficult thing to do, because we tend to be much more longer term than that. But I don't disagree. I guess on that front, markets have done very well globally, not just in India. And I would say that looking forward, it's actually going to be a stock pickers market, which means that active managers who've actually had a very tough time in the last couple of years, it's probably time for them to shine. And I think the next couple of years, they are going to be able to prove their mettle. And as an active manager, I can certainly tell you, I look forward to doing so.
I mean, in a way, you're also saying then that the broad market move may come to an end, right? I mean, big tide lifting all boats, that kind of thing may not happen going forward. So
exactly.
Yeah. So tell us,
exactly.
You said non-consensus
the beta
investing
play is
your...
mostly behind us. Now it's an alpha play.
Okay. Non-consensus investing is your style. Pick 3 things which you think, which are really top of your mind in that category, non-consensus investing.
Sure. Well, the first one I think is there is a general tendency for people to love owning consumer staple stocks. It's true globally, not just in India. And I think that expectations in that sector have become quite mismatched, not to mention the high valuations. So I think one of the biggest negative bets one can make in the market is probably to not own consumer staples. It tends to be the cornerstone of most portfolios. And I would say that watch out. Because the future is not going to be what the past was. So consumer staples is a very non-consensus idea to avoid owning a lot of these fast-moving consumer goods. On the other end of the spectrum, I think people tend to have a big desire worldwide, not just in India, to own physical property. I think the non-consensus trade is to go long intellectual property. And you don't have to go long intellectual property just in technology, which is again the conventional consensus way in which people think you play IP. You can think about the application of technology in an old industry like oil. If you think about the shale fracking industry in the US, which revolutionized the oil markets and make US energy independent, it's the fact that there was an application of a new technology, horizontal drilling compared to vertical, that allowed America to achieve the success. So it's really about intellectual property, not physical property. Hopefully that addresses your question.
You said 3, so we got through 2.
All right.
Yeah.
Yes, I did mention 3. So I think the other industry that is very out of favor and perhaps worth another revisit, not just abroad, but even in India, it's an industry that's very much out of favor, and for good reason. It's come through some very dark days, and that industry is telecommunications. As you know, in this country, there was a lot of competition and cutthroat competition because of excess supplier fragmentation, and now that industry consolidation is occurring, I think that it's better days ahead. Now, of course, one should be careful and do one's homework and pick the right spots. But I think telecommunications as an industry worldwide is very much out of favor, and you can get companies in America like Verizon, Japan like NTT Docomo, in Germany like TEF Deutschland, sporting somewhere between 3.5% to 7.5% dividend yields across the spectrum, which is unheard of in a global economy where interest rates are either negative or very low. So I think telecoms is the other non-consensus opportunity investors can think about.
Okay. Rupal, you mentioned intellectual property, and I couldn't help but think about what's happening with pharmaceuticals as well. In the US as well as in the Indian markets, we've seen pharmaceuticals underperform quite drastically simply because of the kind of competition that we're seeing for generics. But IP comes into play when you're talking about biosimilars or you're talking about complex generics and whatnot. Would that be a space that you would look at more closely, say in 2018? Do you think that it could come out of the dark days that some of them have seen?
Yes, in fact, healthcare is another big overweight in my international and global equity strategy, so you're spot on. Now, that said, I actually own companies that make complex molecules, and so they are not as susceptible to generic biosimilar threats, because as you rightly mentioned, these are complex to manufacture, and because they're complex to manufacture, they're much higher cost of production, which means you don't face the same generic threat in the sense that your profits don't collapse in the way they did when you were able to copy simple molecules. So yes, I think that's another area of opportunity, and you were right to call that out.
Rupal, do you have investments here in India?
Frankly, because my universe of opportunities is worldwide,
okay.
And the Indian markets, as you know, have gone up a lot, at this time I don't have any investment ideas, but we're always looking and we're open for business, but not at this time.
I mean, so that is So since you can, the world is your playground in that sense as a global investor, what you're saying is valuations here are not favorable across the board. I mean, broadly the market's too expensive.
Well, that's one way of looking at it. I think that, we also look for investment opportunities that are very scalable. And if you look at the large cap spectrum, it's really hard to find value opportunities. The action, as you know, in India has been in the mid cap and small cap space, which is not as scalable. But that said, you are right. I think the relative attractiveness of investment opportunities abroad, especially in markets like Latin America, which have, again, corrected for many years, for a long time. It's just the risk reward is better, but that can change on a dime. So we are always looking for interesting ideas, and India certainly is a great destination, especially for stock pickers like myself.
Okay.
So it's really a circumstantial development, and it can change anytime.
Okay. Rupal, I know that you obviously have your logo as a turtle, so you are looking at things from a larger or from a longer point of view. But what would your view be in terms of where exactly Brent crude prices could probably head into 2018, or maybe a medium-term view on that? Are we going back to, say, the $70, $80, and what might the average be according to you as well?
Actually, we're pretty much there. It's around the $70 mark, and it's hard to call sort of volatility in the oil markets, but it's sort of in the vicinity of a single-digit move on either side of it. The good news is, so I'm certainly not in the camp of a $100 oil price or a very high oil price. I don't believe we'll go back to the parabolic, price shoot-ups that we saw in yesteryears, because shale fracking, as I just mentioned, can bring on supply pretty quickly. Now, that said, I think that the demand supply has become balanced enough, thanks to the OPEC production cuts, thanks to certain cuts made in the US market, in the Permian Basin, etc., that you are seeing a restoration of balance. And frankly, a $70 oil price is good enough for the industry to do very well. So I think that's the good news. We're already there. You don't need a higher oil price to make more money in oil stocks.
All right, Rupal, thanks very much. Very interesting conversation with you. Good luck, and I hope that you come back to India and find investment opportunities whenever that may be. Thank you indeed for taking out the time and being with us here. So that is Ariel Investments, who at this point doesn't find India attractive because valuations and also because other markets are offering better opportunities. We'll take a very, I think we have a special conversation lined up next. Lata is here. And I believe we have Dr. Bimal Jalan with us. Lata.
Yes, too good a guest to miss, and that's why I'm sorry I'm taking time from your show. Dr. Jalan, always a pleasure having you with us, sir. Thank you very much for joining us. Well, it's pre-budget season, so the questions are around budget since you are with us just about 15 days before the budget. One of the things which I believe economists have advised the PM is that time has come to impose a long-term capital gains on shares. You have been there, done that, saw it being rolled back in 2004. What's your sense? Is it time to impose that tax?
नहीं देखिए मैं टैक्स पर बात नहीं करूंगा.
Sir, here you can speak in English, sir. Dr. Jalan, this is the...
No, sorry. अभी आपके CNBC आवाज में मैंने इंटरव्यू दिया था.
No,
I was talking in Hindi.
Yeah, you...
And Hindi English mix. Now I will talk straight English.
Okay, English Rupantar, please.
Okay, Lata. No, yeah, Rupantar कर रहा हूँ. Okay. नहीं, what I wanted to say to you is that so far as the specifics of this are concerned on the long-term capital gains tax or all that, I can't comment on it. Let us see what happens.
No, sir, I'm not asking you to outguess the finance minister at all, sir. As a concept only,
exactly.
As a principle, do you think this asset class should be taxed? We anyway tax short-term capital gains, 15%. We have excused long-term capital gains on equities. As a concept and as a principle, is that something that the country should bother about?
No. I mean, as a principle, that any gain, long-term capital gain, etc., I mean, they are part of the income. And that income tax can be applied. There are exemptions, and there are taxes, and there are rates of taxes differ. But, I mean, if you want to include long-term capital gains as part of the income, I mean, there cannot be two views on that. I mean, that's up to us. I mean, similarly, I mean, you can exempt, we have lots of exemptions on different items, and you can see how the economy is doing. If the economy is doing well, and if FII inflows are coming, and that we are, as you have seen, the stock markets are boosted and so on, mutual funds are also advancing very fast. So the government can decide, but it's an issue of at what point of time and when, and this is for the government to decide.
Fair point, sir. The other dilemma or perhaps principle that perhaps the Parliament and the Executive will discuss will be which sector to boost. We have only that much money, so is it infra or is it farm focus? You've seen the government at close quarters for over 4 decades. Where is the government best placed to boost? Is it farm focus or is it infrastructure? Where is the government expenditure effective?
No, the government infrastructure, I mean, what you are saying about, I mean, that there are, so far as the farm loans are concerned, there can be no 2 questions or 2 answers to it. Yes, I mean, the farm loans have to be expanded and the farmers have to be supported. I mean, they are the largest number of people in our country on the farms, and if you have small farms and you can provide help to them in terms of investment or in terms of fertilizer, in terms of buying goods and services, then that's very good. And plus you can also do the infra. What I'm saying, the conflict between the 2 goals is not all that much.
Okay. Okay.
In terms of, if you're talking about even maximum, you're talking about 0.1 or 0.2%.
Okay.
You
but
see
where
what
is
I mean?
the government multiplier effect best in your 3-4 decades of administration and government? Where is the multiplier working well when government invests?
No, but multiplier, naturally, so far as the multiplier part is concerned, in the short run, I mean, the farmers, loans to farmers and so on, they have to plant, they have to use that and their money, and then increase agricultural production, which also depends on, rains and so on and so forth. So, I mean, if you want to say that from the government's point of view in terms of outcomes and so on, what you can guarantee, or what you can, multiplier part, you talked about multiplier part, then obviously in urban areas, the multiplier will be much higher than in rural areas.
Okay.
I mean, what is a multiplier? Multiplier is you invest and then somebody else, you buy things, who buys things from somebody else, and so that is the multiplier.
Yes, sir.
So investment, urban areas and the consumption part, etc.
Okay.
I mean, they are much more, I mean, that from that point of view, it's much higher.
Okay. Fair point, sir.
But we should not neglect the farming sector,
Okay.
from the poverty point of view, for example. That's also very, very important. I mean, all the growth things that we talk about, outcomes we talk about, are a means to an end.
Yes.
They are not an end in itself. You see what I mean?
Yes,
I mean,
sir. So one of the
people.
points that the farmers have been asking is the implementation of the Swaminathan Committee's one recommendation on minimum support prices. Here the budget only can allocate, of course, but raising MSP to cover over 50% of costs is what the farmers have been asking. You think MSP needs to be jacked up?
Again, I mean, I think that the MSP has to be in association with what the inflation rate is in the agricultural sector or anywhere else. I mean, that part is important to take into account when we are talking about MSP and what the prospects are in terms of output of agricultural products. So I would leave it, I mean, in the sense that all these factors have to be taken into account. And as of now, that if you look at it, I mean, things are under control. Inflation is not very high, and we have the resources to be able to finance the, the agricultural, finance any amount of agricultural products or agricultural inputs that we need for consumption or for investment.
Okay. So the other question, and I know your traditional bias has been that growth in investment is more important than fiscal numbers or targets. But we're just coming to this budget on the back of yields having risen almost 100 basis points, probably more like 70 to 80 basis points in the last 12 months. Given that, would you still say that the finance minister should give capex more importance than deficit? That was your answer last time.
No, no, you see, I mean, it's not a bias. What I want to emphasize to you is that it's not a bias. You see that we have, I mean, I don't believe in a target, by the way. I mean, that's important. We both want fiscal stability. We want financial stability. We don't want fiscal deficit to be too high. But at the same time, we want investments and growth. And so the two sides of the coin, I mean, you have to balance them. What the government is, the government will decide what to do and how to do it, in what way. Emphasis at the moment, to my mind, that we should be able to do what we want to do, both in terms of fiscal deficit as well as in terms of increasing outflows for investment. And the reason is simply this, that I mean, this is a personal view again, that the second digit to a fiscal deficit is not of that great importance at the moment. I mean, supposing, that inflation, if you look at inflation and if you look at everything else, I mean, it doesn't matter all that much. Expenditure matters, there is money multiplier, that matters, yes. But 0.1 or 0.2% of fiscal deficit is not of great consequence.
So, hi, Prashant
so
here.
let the government decide.
Yes, sir. So my colleague Prashant Nair is also with me.
Hi, sir. It's been a while. Just a quick point. We have had the Niti Aayog chief recently saying that heavens will not fall if the fiscal deficit is up by a few basis points. And I think you are agreeing. I mean, you are in agreement with that point of view. So you are saying that. Are you saying that aggregate demand needs to be given a boost by government spending? Is that what you're saying? And the government needs to do that. I mean, go on, sir. Go on.
You have to, you have to start with the basics. I mean, why is it that a country like ours needs a fiscal deficit target of the second digit? All of us want low fiscal deficit. All of us want that there should not be money supply or money multiplier should not increase very much. But in the FRBM Act, we have laid down for 3 years a fiscal deficit target. So that target has to be met or has to be given sufficient importance. That is true. But let's hope that after 18-19 all this would fade out and that we will be able to spend as the country desires to be spent, consistent with inflation being under control, consistent with our need for investment and jobs to increase. And therefore I don't believe in fiscal deficit target, by the way, my personal view. And but now that we have a target under the Act and passed by legislation, we have to abide by it as far as we can, and the government is doing precisely that.
Yes, sir, we have a target on fiscal deficit and on inflation, so I guess both sides are in a sense tied up with their timelines. Dr. Jalan, the other...
No, but why do you...
yes, sir.
I mean, this is a very important, from an economic point of view, it's a very important issue. That why do we need a target for both inflation, fiscal deficit, growth rate, everything else?
Okay.
Why?
I think growth rate is an aspirational number. The rest are
hard numbers, but even they tend to be aspirational.
No, of course. We want high growth.
Yes.
But we want high growth. But if you have a target of high growth rate to 7.67%, you need that. I mean, 7.7% is fine.
Okay.
7.5% is fine.
Okay. No, that point is taken, sir. I think we don't have hard targets in growth, except that the budget number has to be calculated. So you have to give some 11.75 or 11.25%. Otherwise, you don't get the nominal GDP number in place. But Dr. Jalan, a final question on banking. There has been a lot of angst that taxpayer money is getting pumped into public sector banks and in large amounts. Your thought on this recap bond itself, and do you think the time has come to question public ownership itself, whether some of it needs to be shed?
I mean, again, I always keep on giving you 2 points of view.
Okay.
Because again, on public ownership here, I mean, for example, public ownership of banks over a period of time, you can decrease it and disinvestment process is started. But public ownership of public sector banks in areas which are, I mean, for example, if you're a public sector bank lending very high amounts to build roads, say, or to do things where the rates of return are not as high as they could be if they were lucrative, if they were short-term investments, So you have to distinguish that part. In our country, we need some banks which can take our deposits, which are safe, which are absolutely safe. You know, you, I, and everybody else can go to public sector banks, and we are not, you know, I mean, that in the sense that they are safe deposits, so far as you are concerned, or I am concerned. And then the amount of money that can be spent on priority sector, that's also been specified already. But if some things have to be done where the rate of return is going to be low, but for the benefit of the people of India, for the benefit of the poor of India, then I think we have to accept that point of view, that this is also our responsibility. And I'm emphasizing that point because don't draw a quantitative line to 3 decimal points or 2 decimal points.
Yeah.
Yes, we want low fiscal deficit, we want high growth, we want you know, very
No, I take your point.
investment.
I take your point, sir, that public ownership will help us invest public money, deposit money in infrastructure or in services which are needed by everybody, but which may not be in the short term very lucrative. But the point is, when you list the banks, then you expect an SBI to perform like an ICICI. You expect a Bank of India to give you returns like HDFC Bank. So, you know, listing has created that compulsion. Sir, a final question, since you said safe deposits, where our deposits are safe, there has lately been this FRD, the fiscal responsibility bill, sorry, not fiscal responsibility, financial resolution and deposit insurance bill, which says that deposits may be pulled in if a bank fails. Bailed in is the word. Your thoughts on this provision of the bill?
No, there can't be two thoughts on this. That so far as the public sector banks are concerned, that we don't want this so-called lean-in or whatever. And it's much better to do it on at the aggregate level of government expenditure and try and keep it within control. But if it has to be done by saying that the depositors' money would be affected in public sector banks, that is not the right thing to do, to my point of view.
Okay.
And the government has taken very strong action for recapitalization.
Yes.
For example, for the benefit of the banks.
Yes.
So that shows that this has very high priority. So I would not give any importance to the discussion that we are having in the sort of media and elsewhere about deposits being used.
Fair point.
You know, deposits, there may be effect on the deposits which is adverse, but that should not be the means of financing something else by
Fair
the
point.
public sector or government.
Okay. Point taken, sir. Thank you very much for lending your voice to that. The entire discussion, Dr. Jalan
With
says,
pleasure.
on pulling in deposits
Thank
is
you.
meaningless. Thank you very much. Thank you very much, Dr. Jalan, for joining us. So, I mean, saying that, you know, the media should not even speculate on
No question.
pulling in deposits to build a bank. That will not be done.